How do mutual funds compare to other investments? Imagine having a big basket filled with different kinds of fruits. If one fruit isn't good, the others can still be tasty. That's similar to how mutual funds work in investing. They are a way for many people to pool their money together to buy a mix of assets like stocks, bonds, or other securities. This pooling makes it easier for individual investors to own a small part of a large, diversified portfolio without buying each asset separately. This diversification helps lower the risk because if one investment doesn't do well, others might perform better, balancing things out. Compared to buying individual stocks or bonds, mutual funds are simpler because they are managed by professional fund managers. These experts decide which assets to buy or sell, saving you time and effort. For beginners or teens just starting out, this professional management can be very helpful. There are different types of mutual funds based on how much risk they carry and what they aim to achieve. Money market funds are very safe and invest in short-term, low-risk assets. Bond funds, also called fixed income funds, invest in bonds that pay interest, offering moderate risk. Stock or equity funds mainly invest in company stocks and tend to have higher risk but also higher potential returns. Balanced funds combine stocks and bonds to try to give a mix of growth and safety. Mutual funds do charge fees for their management and other expenses. These fees can be higher than those for exchange-traded funds, which are similar but often have lower costs. To buy mutual funds, you usually need to meet a minimum investment amount, which can be around $50 to $100. For teens, a parent or guardian often needs to open a custodial account to get started. The returns from mutual funds come from dividends, which are payments from the companies in the fund, and capital gains, which happen when the fund sells assets for a profit. But it's important to remember that mutual funds carry risks. The value of your investment can go up or down depending on how the assets perform. When comparing mutual funds to investing directly in stocks or bonds, mutual funds offer a simpler way to get diversified exposure without needing a lot of money or deep knowledge. They are easier to manage and can be a good starting point for teens learning about investing. However, they might have higher fees and less control over specific investments. Compared to savings accounts or money market accounts, mutual funds usually have the potential to earn more money over time but also come with more risk. For teens just beginning to learn about investing, mutual funds are a good option because they combine many investments into one, are managed by professionals, and help spread out risk. Knowing how mutual funds compare to other investments helps you make smarter choices about saving and growing your money over time.